We're live.
Good evening, ladies and gentlemen. Good evening, members of the Free Credit Repair Advice Group. I am Jeremy Dysock. I am the founder of the FCRA group, the Free Credit Repair Advice Group. I'm also a FICO certified credit coach with Prosper Law Group's Credit Life Credit Improvement Program. I'm an active admin on the board. You may have seen me. Some people love me, some people hate me, but there you go, and here we are. With me tonight, I have got Mr. Jared Havens, one of the partners of the firm at Credit Life, here to join us. He is also a FICO certified credit coach.
Yep. Hello, hello. I've done a few videos already and on student loans primarily, but today we're going to be talking about utilization, the FICO model, the scoring algorithm, all sorts of great stuff.
Yep.
And we're eating hot peppers.
We're eating hot peppers because we want to talk about good ideas when it comes to credit utilization. How to utilize your cards, what balance to limit ratios to maintain, and how to best be productive with them.
Yep.
Time to put in a shameless plug.
Yep, perfect.
Do not forget about our channel, our video channel on YouTube, Credit TV. It's the Free Credit Repair Advice Group's official credit channel. It's the official credit channel of the Credit Life Credit Improvement Program. If you have not yet subscribed on YouTube, we strongly advise you to subscribe as soon as possible. Again, that's Credit TV, CREDI TV. Thanks a lot. Okay.
Let's just wait. If you don't mind, let's wait for people to get on. 7 people are watching. I want to wait for more people. Can everyone hear us okay? Tiffany, if you don't mind, if you can hear us, will you let us know if you can hear us okay, the audio? We have thumbs up already.
Yep.
Oh, yeah.
All right, sounds like we are getting audio through. That's good.
That's good, that's good.
All right, so we've got Tiffany, we've got Isaac. We're up to 9
that's good.
people in the group here. All right, so Isaac, you can hear. That's fantastic.
Look at that.
Okay, so in just a minute or two here, what we're looking to do is we're going to go through and give you a little extra knowledge today. We're going to teach you about the FICO wheel, the FICO algorithm, the sections that make up your credit score, your lending score, your FICO score. And then we're going to be talking about the biggest part of it that we can impact.
Yes.
Revolving credit. We're going to talk about what's the right way to obtain it. What is the right way to utilize it once you've got the card? And we'll tell you about some of the wrong ways that are out there. So we're talking good ideas, bad ideas. So in my typical form, I came up with a phenomenal bad idea.
There we go.
My bad idea is at the end of this, Jared and I are going to eat a bunch of chili peppers for absolutely no reason other than the fact it's a bad idea. We got ourselves some jalapenos. There is a great big plump.
I've never had a red jalapeno.
Plump red jalapenos.
So that's good.
That's, by the way, those of you who are playing along at home, this is a 5,000 Scoville heat unit chili pepper.
Very good.
This is a Serrano. Serrano, it's a hotter relative of that jalapeno, and these are particularly large ones.
Yep.
These clock in at 20,000 Scoville heat units. In other words, 4 times hotter.
Significant.
Yeah, 4 times hotter than that. And then this little bad boy right here, this is the habanero chili pepper. Yep. Habaneros can get up to 588,000 Scoville heat units, or roughly 100 times as hot as the jalapeno. So that's the bad idea I came up with for us for the rest of this evening. So we're going to talk credit. We're going to talk good credit ideas, utilization. We're going to talk bad credit ideas, and then we're just going to make an overall bad decision, and you guys get to watch. So let's start off. We're going to start off with what's known as the FICO wheel, the FICO algorithm, if everyone can see it back here.
Well, if we can, I think if we slow down just a little bit, I'd really like, if it's possible, to get some participation, if people know what the 35% is. Anyone that's watching this right now, just put it out there in the comments. What do you think equates to this highest percentage of the FICO credit score? What is this right here within 35%?
We'll give you some clues. There's 5 main components, 5 main areas that make up your FICO score.
Get the milk ready.
One of them is responsible for 35% of your score. One of them is responsible for 30% of your score. One aspect's responsible for 15%, one for 10, and another for 10.
Let's see.
We have debt.
Debt. There we go. Payments on time.
Payments on time. Payment history. Boom.
There we go,
We've got some
Jamie.
35%. A
Right.
full 35% of your FICO score is payment history. It's a history on repaying money that's been lent to you. Basically, if I lend you some money, what are statistically the odds that you're actually going to pay me back? Awesome job, Jenny.
Very
So
good.
that's 35%. Now a full 30%.
This is key. This is why we're doing this tonight. Is 30%. So anyone who's watching,
Anyone know?
what makes up 30% of the FICO algorithm?
And I know we're on a little bit of a delay because we're going through the magic of the internet. So yeah, we're looking, who knows what payment history? We already got payment history, Isaac. We're looking for what makes up 30%. Do you know what's responsible for 30%
30% of the FICO algorithm.
Your entire FICO score? Debt, we're on the right track. Utilization.
There we go.
We got it. Basically,
There we go.
30%.
Amounts owed, so that does include debt.
Yeah, but 30%, a full 30% of your FICO score is balance to limit ratios on specifically revolving accounts. Revolving accounts, credit cards, cards that you can charge them up, you can pay them down, you can pay them off. As long as you're happy with the bank and the bank's happy with you, those can revolve forever.
Yep.
So 30%, a full 30% of your lending score, your FICO score, is utilization. Just for kicks, since we're doing it, who thinks they know the kittens? No, Bo, unfortunately, it's not made of kittens. I wish it was. 15% of your score. 15% of your FICO score. Who knows what makes that up? And all I got's kittens. So yeah, we know it's not. Yep, we've got a line. It's not kittens. Basically, you know what? I want to get back into this. I want to get into the meat and potatoes of why we're here tonight. So I'm going to give this away. 15% of your FICO score is time. It's length of credit history. How long have you had these accounts? The one thing we can't affect in the FICO algorithm is time. If I ever figure out how to affect time, I'll come back and tell you last week. But for the meantime, we have to work with what accounts are the oldest. We want to make sure that we take good care of those and manage those. Now, 10%, a full 10% of your FICO score is the credit blend. What types of accounts do you have? One kind is better, two are better, three are better. There are different types. There's revolving credit cards. There are lines of credit. There's retail credit cards. Those all fall into revolving. There are installment loans.
Credit mix,
student loans. Yep, credit mix, you got it. Student loans, auto loans, closed-end loans.
Real estate.
Those sorts of things. Mortgages, absolutely. Home equity lines of credit, second mortgages, closed-end second mortgage, and first mortgage. 90-day note loans, they're all blended together. So if you hear us in the group say, you need to get a self-lender to round out your profile, that's what we're talking about. Last but not least, 10% is new credit. That's stuff you opened and things you did within the last 24 months that are giving you extra weight, and that is where your inquiries are. So your inquiries, everyone's coming in the group, they're up in arms, they're worried about the inquiries.
Yep.
Your inquiries only make up a
10%.
part of the 10%.
Yep.
Everyone goes, I've got bad credit, I got a lot of inquiries. And I say, why do you think you need to get rid of them? You don't. Let's get the rest of this under control.
Well, I want to step in just real quick. So, as a recap, I know we have a delay, so it's kind of hard to look at this and gauge where I'm at. But I want everyone to understand what Jeremy just said. And I've seen this in the group too. A lot of people are fixated on inquiries. How do I move inquiries? Inquiries are the only thing hurting my credit score. That's not true. If you look at this, 10% of the FICO algorithm is based on new credit or inquiries. Yes. Is there a negative impact when you inquire towards something that's credit seeking, you're applying for a loan? Yes. But it's 10% of your score. If you're in a position of poor or fair credit, I can tell you this, more than likely it's not this that's causing that. It's this. Right here. And right here specifically, which has been talked about a lot in the group when it comes to utilization, we're going to touch base on that because a lot of people, and I understand, they hear 1 to 3, it's a little, I'm sure you've heard it.
Yep.
It sounds difficult. It sounds too little. Hey, how can I work the system? How do I do this? Can I do this? No. But we're going to go into this. Now, I want to touch base just real quick on payment history. Here's one thing that I think is very important to understand. When you see this, most people go, okay, make my payments on time. That's true, okay? That's true. Make your payments on time. The more positive payment history you can build within your credit report, the more positive impact it will have on your credit scores over time. But check this out. FICO is a risk assessment algorithm, okay? It's designed to gauge risk to help banks and lenders make better lending decisions. So within your history of lent money, if you have any late payment history, 30 days late, 60 days late, 90 days late, 120 days late, that is going to be a significant negative impact to FICO credit scores. Now, it's more within 12 months, 24 months, but if it's within your length of credit history at all, it's hurting you, okay? So keep that in mind. You want to build on this in a positive way, but if you've taken a look at your credit report and you're wondering why your scores may be lower, I want you to look at all the different accounts and look at the payment history and know, have you had any late payments? Because that's a significant negative impact weighing down the scores.
All right. So this brings us to what we wanted to talk about tonight. Utilization.
We'll probably bring on us having to eat some of those bad boys.
Utilization. Yeah, there are good ideas, there are bad ideas. So I wanted to couple some of the good ideas we're giving out tonight and some of the bad ideas about credit with some bad ideas of our own. And I strangely, out of the blue and while heavily influenced by NyQuil, went on to the moderator chat and suggested that he was going to be eating hot peppers before I realized I was also doing this tonight. So, utilization. You've heard everything, I mean everything on how to best manage your credit cards to add the most points to your score. I promise you, over time, let us know if any of these sound familiar. You've heard, keep your credit cards under half. Please keep them under half. Other people say, no, 30%. You want your credit cards at 30% or less. Some people say 10%. Some people say, charge them up and pay them off every month. Some people say, open them and don't use them at all. Just let them sit there. If you've heard one, or honestly, if you've heard more than one of those items, well then, as they say in the South, bless their hearts, because they're wrong. Here's the thing, though. You're hearing this from bankers. You're hearing it from realtors, mortgage lenders, financial advisors, financial planners, tax preparers, car
your
people,
neighbor.
Susie frickin' Orman, Dave, the credit genius
Dave
Ramsey
has zero.
Right. Oh, yes,
zero,
he said, yeah.
which is impossible.
So, what these people are all trying to talk about, and they simply do not know the answer to, is this. What is the best utilization on a revolving account, on a credit card, to add the most points to your score each and every month? Jared and I, we know what it is. We do. We are FICO certified. We're certified in the algorithm, the math formula that makes your FICO score. And there is a zone, there is a region, there's a magic window that will add the most points to your score each and every month. The thing is, it's comically small. The perfect balance to limit ratio within the FICO algorithm on your revolving accounts is 1% to 3%. 1% to 3%. No more, no less. Any less, you broke it. Any more, you broke it. Less than 1%, they don't consider that mathematically activity. You need activity to generate points, like a car needs gasoline to generate power. Yep. Any more than 3%, well, number one, you didn't listen to your coaches. And number two, you're outside the range where you're trying to get the most points. Now, if you've got a goal, you want to qualify for a mortgage, you want to qualify for a car, you want to have cheaper car insurance, you want to have these things that you need a score for, you want the premium spot. You want the 1% to 3%. Now, what that means is this. I'm going to lay out for you the perfect scenario, the good idea, not to deviate from. We open up a credit card. Doesn't matter if it's a secured card. Doesn't matter if it's a card you qualified for through your bank. I'm going to use the example of a $300 limit Visa card, okay? So you open up your new card. You've got a $300 limit on this shiny Super Diamond Platinum Edition You're So Flippin' Special Will Make the Name Long card, okay? So you're now going out into the world with this new weapon, this credit card, this financial tool. What I want you to do is this. I want you to find a 1% to 3% of the limit spend. Now remember, I said the limit was $300. So 1% to 3% of that is $3 to $9. $3 to $9. We're going to find that spend. It's best to use something recurring. If you have Netflix, if you have Hulu, if you have Dollar Shave Club or ABC Mouse or Spotify, if you've got a little cheap gym membership, if you've got a little utility trades membership, something you like to subscribe to on PlayStation Network, or if you just want Amazon to automatically ship you the toilet paper for the house every month, you can do that too. You find a small, reoccurring spend between $3 and $9, and you set it on the card. Next step, you're going to set your checking account to auto pay the credit card when it's due, on the due date. So money goes on, money gets paid. Money goes on, money gets paid. What do? Nothing. You sit back and watch Orange is the New Black while your credit score goes up.
That's huge. And I want to touch base on that. That's huge. Everyone really needs to hone in on that. And obviously this is going to be up on the group. You can watch it again. It is so important to understand that why are you here? Why are you in this group? You're in this group because you have a goal. Your goal is to improve credit scores. Your goal is to improve your credit report or credit profile. You want to be approved for a mortgage. You want to be approved for an auto loan with low interest rates. You're paying high insurance premiums due to your credit score. That's homeowners insurance, life insurance, mortgage insurance, and also life insurance. These are all based off credit score now. You're paying, right? You want to fix that. This is what we're trying to drive home to you guys. I understand that when you hear or see 1 to 3%, and you have all these other groups out there talking about, no, all you have to do is pay it down before the statement closing date. All you have to do is this. All you have to do is that. No. Stop all that. Stop all that. You're making it too difficult. You have a goal. Look at your credit cards and understand those are tools to get you to your goal. So if you're already in a position with higher balances, higher ratios, then budget yourself. Get in a position where you can slowly start bringing down those balances, bring down those ratios, and once you get to the perfect ratio of 1 to 3%, you need to maintain that, okay? That's so important. Every single month. Auto pay on your bills. Tie something that you already pay to it. Netflix, Hulu, all that. It gets paid, automatically paid on time. Take those cards out of your wallet, put them away, and let them know, or where you know, they're going to work for you every month, okay? That's key.
A number of my clients even cut them up. I explain to my clients that these are simply tools to build your score. These physical cards, we've put the Netflix on it. We found the routing number and the account number for the checking, and we went on CapitalOne.com and we set up your auto payments. Everything's happening whether or not you're holding on to this plastic credit card. What most of my clients will do is cut it up because the account itself still exists. The account itself still works, but A, the temptation's gone, and B, the ability to be stupid is gone. And I would be remiss if I, were to think I'm the only one who was ever young and dumb in this group. My guess is most of us are here because we were young and dumb.
Exactly.
So
we've all made mistakes.
Absolutely.
We're all human.
These are not your forever cards. You're not going to forever be buying a box of Frango mints for $9 from Macy's. It's not the forever plan. It's the plan to build your score, though. It's the plan.
For now plan.
Right. Now, people will tell you, hey, well, you know what? You charge what you want, put maybe a tank of gas, pay it down, just leave 3% on it at the end of the month. Wrong!
Is that a pepper moment? Is that
Wrong!
A pepper moment?
That's bad advice!
That's bad advice! I think we need to...
That's bad advice.
A big one for me. Oh my goodness.
Yeah, I've heard that about you. All right. So bad advice. Spend what you want and pay it down when it's due because they only report once a month and whatnot. It's not true. It's bad advice. It's a bad idea. This is a bad idea.
This is what happens when there's a bad idea.
Very delicious.
Oh, that's not bad.
There it is. All right.
The spice is coming in. Woo!
Yeah.
Okay, I'm having a hard time with this one. I'm very scared now.
It's all right.
Oh my goodness.
We've still got Serranos. We've still
Oh,
got
no.
habaneros available.
I need the milk.
You need your milk already?
Yes.
Okay.
I'm a white boy. I'm sorry.
All right.
I like sriracha, but that was spicier than sriracha. I'm a little
Those were
bit
good.
right
They were
now.
very delicious. If anyone wants to know the difference between a red jalapeno and a green jalapeno, when they're
Wow.
red, they're ripe. It's sweeter, a little bit thicker pulp. And it's how you want some of this?
Wow.
No.
Chris
Yeah, we
Kruger,
got
one
Chris
of our
Kruger
other
in the house.
coaches.
Hey, come on in. Say hi.
Jerry, wanna
Come say
can we
hi.
interest you in a nibble of a
No.
got a habanero? No?
No, I'm good.
Guys, look at this.
Say hi to the say hi
Go
to
in the
the
middle.
Hi, everyone.
There we go.
Here we go. Come on in.
Wow, that's spicy.
Woo!
Chris
All right.
Kruger, moderator of the group.
You can smell the peppers in here.
Oh,
My
wow. Okay,
goodness.
so that was a bad idea. That really
Awesome.
That really was a bad idea. A terrible
buddy.
idea. Charging whatever you want on the cards and paying them down before it's due, or just leaving a couple bucks on there. Yeah, it's a bad idea. So
That's a very bad idea. And,
Whew.
and here's what I want to touch base. Not only is that a bad idea, but I think I touched on it earlier. People make it too difficult. You know what I mean? And I think what it is they hear 1 to 3%. They look at their credit card limit and say 1 to 3%
Oh my God.
of $300. That's nothing. I can't do that. Why don't I even have this credit card? Why am I using it? Once again, it's all about the goal. These are tools to get you to your goal. Okay? That's how you have to look at it. Do not look at credit cards saying, hey, this is extra money. This is my money.
yeah, look what I can spend.
It is not your money. This is available credit to you that you can utilize,
Yep.
but it's very easy to overutilize and get yourself in a bad position. This is a big reason why at Credit Life we are about credit and financial stability. These type of things that we're teaching you, there's no secret here, right? A lot of people don't understand the 1 to 3%, but this isn't a secret. This is about real education, real strategies that will get you to your goals.
And good ideas. We want
And
good,
we need to find
good
them.
ideas. We
Yes,
want good
that's true.
ideas. What other bad ideas? Well, there are a lot of bad ideas I've seen floating around the group.
What do you?
You know where I'm going. You know where I'm
yeah.
heading, don't you?
Yes, I do.
We're saving that one for the end.
Yes. Jeez. And as soon as we do habanero,
Yeah, that's the
I'm
end of
going
the show.
to cry,
That's the end of the show.
and I think we'll have to leave.
So a lot of people will say, "Hey, let's all band together and join this certain credit union," or "Hey, let's run out and get these things," or "Hey, this card." You know, this. I think a bad idea versus a good idea is this. So if you're in a position your score is low enough that you need a secured credit card. For those of you who don't know, a secured credit card is where you put a deposit into a small savings account you do not get to touch. And that acts as a security deposit on the credit card. The bank then gives you a regular old credit card. You can charge it up, you can pay it down, you can pay it off, you can use it again.
Yep.
It's got interest, it's got late fees, pay it on time, that was good. Pay it late, that was stupid. It's a regular old credit card. Well, typically, if you go with a bank like U.S. Bank, Wells Fargo, Capital One, at the end of 6 months, at the end of 12 months, they will review your account. And if you've played nice in the sandbox and done what you're supposed to do, they'll refund you that security deposit, but you still get to keep the card. Now it's an unsecured card. But if you charge it up to $300, you skip town to Tijuana, they got their money back.
Yep.
So when it comes to secured cards, if you're looking, the same rules apply, 1% to 3%. Just because you have security there doesn't mean things have changed, 1% to 3%. A good idea is to always pursue a secured card that will convert.
Yeah.
The cards from the big banks convert.
Ideally.
Yep.
That's
Then you
the
got
ideal.
things. There are cards you'll see people advertise. Blue Sky. There are cards that report to credit multiple times a month for some, as to current unknown reason, and these things are a dead end. You put your money in. It's a secured card. It's never going to be your forever card. Because remember, going back here,
Yep.
history and time, we want that card. Ideally, it could start out as a secured card. 10 years from now, it could be a $15,000 Visa card. We want it to be your forever card.
Yes.
A good idea is to get a card that converts. And a bad idea,
No.
a bad idea
Uh-oh.
is to go for these fly-by-night companies you sometimes see posted.
Yes. There's
and
a
get
lot
a
of them.
card and get a card that does not
Oh my
convert.
goodness. Hold on before we have that, so I can speak, because I can already tell us this was 4 times as hot as the other one.
20,000 Scoville heat units.
What Jeremy's explaining is ideally, if you can obtain a secured credit card that if you manage it correctly, over time, it's a fully refundable deposit, and it also converts to an unsecured credit card. That's ideal, okay?
He's stalling.
I am.
He's stalling.
I am, actually. But also, worst case, and this is still a good case, you want to find a secured card that at least has a fully refundable deposit, okay?
Yes.
There are some cards out there that don't report to all three bureaus that are secured cards. There are some out there that
That'd be a bad
require
idea.
you to close the account to get the fully refundable deposit.
That's a bad idea.
That's a bad idea. These are all bad ideas.
This is a bad idea.
What does that mean?
It's time for another bad idea.
Oh my goodness.
Serrano chili pepper. Cheers.
This is 4 times as hot?
20,000 Scoville heat units.
Okay.
All right.
You guys don't have enough milk.
They're good. They're sweet. Like a bell pepper.
Oh boy.
Give it time. Give it time.
Oh, the habanero's
Here
gonna
we
be
go.
horrible.
Woo!
I can't believe it.
All right. Whoa,
This
son of
is
a...
like bad news. This is bad news, guys.
Guess what? This whole thing was a bad idea.
Yes, it was.
Mm.
Oh.
All right. By the way, we will get to questions and answers afterwards, if we can.
Oh my goodness.
And we will try. I promise we will try. That's as far as that's all you're getting.
I know this may not be appropriate,
Just doesn't go away, does it?
but I am not looking forward to having to use the restroom later. Because this is not good.
Just make sure you wash your hands before you go.
Oh my goodness.
All right.
Oh.
So the last.
Oh my goodness. Sorry.
I know.
I'm weak. I'm sorry, guys. I'm weak.
You think tonight's bed? Yeah.
Oh my goodness.
Wife told me I already have to sleep on the couch. I told her I was doing this. She goes, "Poor Jared."
Oh my goodness.
All right.
Wow.
So can I have some final things? Man, I'm just gonna go into one of the bad, the bad ideas right out of the gate.
Yep.
You have seen a lot of talk in the group and elsewhere about the infamous shopping cart
Waiting for this.
trick. The shopping cart trick. The SCT. Shopping cart trick. That is where you go and apply for a number of retail cards simultaneously, essentially. And they give you some promotional abilities to open credit cards in the checkout. And you do a few of them at the same time. The bank that offers them is Community Bank.
Yes. Comedy Bank.
Mm-hmm.
That's a great bank. They're laughable.
It is a comedy. So, Community Bank. They offer these things. And they're meant to be promos for the shoppers so that these stores continue to get their money. The thing
Yeah, I'm
is,
sorry, guys. I have to laugh. He literally, if you guys saw this, he literally went, drank it,
set it down, put the cap on,
was
untook
about
the cap
to,
off.
and then decided, no, I need another swig.
All right, so what happens is you open up all these cards. Now, here's the thing. When we're talking about setting up a pattern, a good thing where you're doing your Netflix, your Hulu, something you're going to use forever onto this card, if you were to use the 1 to 3% because you're supposed to
Yes.
on these cards, that means you have to specifically, you might be a guy, so you get to buy a bra at Victoria's Secret, one of the easiest ones to get every month. Which, if you have a girlfriend, that's good. Otherwise, I don't judge. So,
That's funny.
how many candles from Pottery Barn do you really need? You got to think practically.
Yes.
Now, I'm not going to get into the ethical things, the history of it, but we do not advise on the shopping cart trick in
No.
this group. It will get you banned. The primary reason, it's just not a good plan. It doesn't fit into
It's
a good
not a good
blueprint for
plan.
somebody.
It's not ethical. It's a trick.
Mhm.
They call it a trick for a reason. You do not want to put yourself in a position where you're deemed as credit manipulation. Okay?
I
You
specifically,
do not want that.
I specifically last night spoke to one of the senior vice presidents to talk to you with, the senior vice president of Community Bank. They are going through and reviewing all of the accounts. They have got members who have joined the Credit Warriors group, have joined the Hidden Credit Secrets group. There are a number of groups that do say go ahead and do this as a tactic. And they're finding these people, they're going through, and there was a rumor that if you had applied for a visa, they'd catch you and they'd close all your accounts. They're starting to do it with all of them. Then when they're closing them, I've already seen this, they're putting them as fraud
Yep.
on the credit report. Not as in fraud was committed against you, but you committed fraud. It's bad. You guys just avoid it. Just that's all I'm
avoid it.
telling you, avoid it.
And in all reality, what is the benefit of shotgunning out and getting that many accounts at once? These are not necessarily accounts that you want to keep long term, right? You know what I mean? So you really want to think about the future. And I think what happens to people is they're focused in on the now. Now. I want to improve my credit score now. I want to repair my credit now. I want this mortgage now. And I understand that, but you need to be realistic with yourself, okay? You need to look at and understand, what am I looking to accomplish? What's a realistic timeline to do this? And what are the steps that I need to be doing along the way to get me to my goals? That's how you need to be thinking. You need to have discipline. Discipline is so important, okay? I know I'm a little bit more hardcore when I get into it, but it's true. You need to have discipline.
You do. Listen,
I
actions
don't
have
wanna be doing this.
consequences.
I'm already have a runny nose and everything. It's like, dude,
Actions have
why is
consequences.
this here? Why am I doing this?
The shopping cart trick. A very, very,
Bad idea.
very, 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 very bad idea.
Fraud.
We'll just put that there for now.
Yeah.
Eating the dog's not going to eat it, so. Eating a 500,000 Scoville heat unit chili pepper raw, the habanero.
Wait.
Also,
What's the level?
500,000 Scoville heat units.
500,000.
The
And what was
jalapenos 5,000 Scoville heat units. The Serrano is 20,000 Scoville heat units. And this is 500,000. There you go. 500,000 Scoville heat units.
Oh,
This is a habanero. It's from the Yucatan Peninsula of
How do you
Mexico.
know all this? This guy. Oh my goodness. Everyone, you guys have to just enter into my world here. And Rick Wenner, Chris Kruger, our office here. We have a lot of other people too. Jeremy somehow knows everything.
I do.
The
I know
oddest
everything.
things. He has
I'm not
too
kidding.
much knowledge.
I'm not kidding. I do. When I tell you I know everything, it's not me just being
He
an
needs to be on
ass.
Jeopardy. What is?
Oh, wouldn't that be great? What is the reason I'm here? Chris, you know, I do have a third.
What is the
chili
reason
pepper.
I'm doing this again?
You sure?
I am.
You're positive?
I am
You don't want to jump
positive.
in?
No.
You sure? We
I
got it.
am not touching one of them things.
All right. Don't even touch them. All right.
So
So
we have to take at least half, like the other
yeah,
ones?
you got to bite some in half.
We have to be consistent. Discipline.
discipline. does
Financial discipline.
does not the mountain need the rain? Does not the forest need the trees? Do I not need to eat this?
All right.
All right. Habanero chili pepper. Haga.
Tastes good so far. Always.
So.
No! Oh my! Mm. Wow.
So bad ideas.
That comes
Eating
on.
habaneros raw.
Oh my.
It's okay. It
Oh,
keeps
wow.
getting worse.
Whoa.
Bad ideas. Shopping cart trick. I feel strongly enough about the shopping cart trick that I was willing to eat a fresh habanero pepper in front of you guys to show how strongly I feel that's a bad idea.
Wow.
I hope that you take away from this.
I'm weak. I'm sorry, guys.
I hope you
Wow.
take away from the the endorphins kick in. You'll feel like you're stoned. I hope you take away from this exactly how important it is to do things right. How important it is to maintain proper steps, proper
It's
utilization.
very important because I don't want to have to eat these peppers anymore. That's.
I do hear there's
Wow.
something called a Carolina Reaper, a scorpion, and a ghost. I hope no bad other ideas show up anytime in the near future, or else our next video is not going to be pretty.
Yes.
Mm.
Wow.
So, utilization. Balance to limit ratio is responsible for 30%.
You control this.
Yep, 30%.
You control this.
The prime.
Wow, I can't speak.
The prime utilization 1% to 3%, no more, no less. Set it up to auto pay. Guys, we're gonna cut this one short here.
Yeah.
I think this is getting worse, not better. So for Credit Life, for Credit TV, for the Free Credit Repair Advice Group, I'm Jeremy Dysock, FICO certified credit coach, and admitted chili head.
I'm Jared Havens, co-founder of Credit Life Credit Improvement Program, and my mouth is on fire.
Thanks for watching, guys.
Please don't make any more bad
Yeah, stop
decisions.
making bad choices. We feel your pain. All right.
Wow.
Have a great night.